The China trade in dollar. Have you ever wondered how China's economic prowess affects the value of the US dollar? Or perhaps you are curious about the intricate relationship between these two economic powerhouses? Well, you're in the right place. In this video, we're going to unravel the China trade in dollar relationship like never before. We'll explore the history, the current dynamics, and what it means for the future. We'll discuss the trade imbalances, tariffs, and the impact of the US-China trade relationship on a global scale. Rise of China as an economic giant. China, a nation with a history spanning millennia, has catapulted itself into the modern era with astonishing speed. Its remarkable economic growth over the past few decades has made it a force to be reckoned with on the world stage. China's manufacturing prowess and its ability to produce goods at a scale and cost that few can match have transformed it into the world's factory. Companies worldwide flock to China for manufacturing, making it an integral part of the global supply chain. As a result, China has become a major trading partner for countries around the world, including the United States. The China-US trade relationship is undoubtedly one of the most significant in the world, with billions of dollars worth of goods flowing between them annually. However, this economic partnership has not been without its complexities. One of the most pressing issues is the trade imbalance between the two nations. For years, China has been exporting more to the US than it imports, leading to a significant trade deficit for the United States. China-US trade war. The trade imbalance between China and the US resulted in prolonged China-US trade wars. The United States had been running a large trade deficit with China for many years, meaning that it was importing far more goods from China than it was exporting to them. This trade deficit was a central point of contention for the Trump administration, which argued that it was detrimental to American industries and jobs. The U.S. accused China of engaging in unfair trade practices, including intellectual property theft, forced technology transfers, and subsidizing its industries, which gave Chinese companies an advantage in international markets. These practices were seen as undermining the competitiveness of American companies. To address this issue, trade negotiations and tariffs have been conducted. The United States, under various administrations, has taken measures to protect its industries and address perceived unfair trade practices by China. The trade war has not only disrupted global supply chains but also had far-reaching implications on diplomatic relations, investment decisions, and the economic prospects of both China and the United States. Chinese yuan versus US dollar. Now, let's talk about the impact of China's trade on the US dollar. The dollar holds a unique position in the global economy as the world's primary reserve currency. This status gives it tremendous influence over international trade and finance. When the US dollar strengthens or weakens, it can have profound effects on global markets. China's growing economic might, coupled with its significant foreign exchange reserves, means that its actions can influence the value of the dollar. Moreover, the competition between the US and China in manufacturing and technology sectors can also affect the dollar's value. Trade tensions, tariffs, and sanctions can disrupt supply chains and create uncertainty in financial markets. One essential factor is the exchange rate. China's management of its currency, the renminbi, RMB, or yuan, has been a subject of international debate. China has at times been accused of keeping its currency artificially low to gain a competitive advantage in exports. When the RMB is undervalued, it makes Chinese goods more affordable for international buyers, which can lead to trade imbalances and fluctuations in the dollar's value. Currency manipulation can be a contentious issue in trade negotiations. The U.S. government and international bodies have pressured China to allow its currency to appreciate more freely, contributing to a fairer global trade environment. Why the China-U.S. trade relationship matters globally. The China-U.S. trade relationship is closely watched by economists, policymakers, and investors worldwide. Its dynamics have far-reaching implications for the global economy, and the ripple effects of any major development can be felt across borders. The China-US trade relationship matters globally because both China and the United States are economic powerhouses with substantial influence on the global stage. Their trade interactions impact economies and industries far beyond their borders. As we navigate this complex landscape, it's essential to remember that the China-US trade relationship is not a zero-sum game. Both countries have much to gain from cooperation and constructive engagement. A balanced trade relationship benefits not only the two nations but also the entire world. In conclusion, the Chinese trade and the US dollar are intertwined in a complex relationship that affects economies and markets globally. The relationship between these two economic giants is continually evolving, and its impact will continue to shape the course of world economics for years to come. Thank you for joining us on this journey through the fascinating world of China trade and the mighty dollar. If you found this video informative, don't forget to like, share, and subscribe to our channel for more in-depth explorations of critical global topics. Your support helps us continue to bring you valuable content.